Good afternoon and warm welcome to everyone who has joined us today. My name is PIYUSH TIWARI and I am professor at the Faculty of Architecture, Building and Planning. Before we begin, I would like to acknowledge the traditional owners of land I'm on today, the Wurundjeri people, as well as the traditional owners of land you are situated on, and acknowledge that Indigenous Australians have been custodians of the land and waterways of Australia for thousands of years. I pay my respects to their elders past, present, and emerging. As part of the State of Industry webinar series, we'll discuss today the future of travel industry post COVID-19. Few housekeeping things. Please post your questions through the Q&A function on your webinar screen. My colleague Simon Elcleb will monitor these questions and pass it on to us. We will try and take your question as they come along. If some of these remain unanswered, we'll take them towards the end of the discussion if time permits. The news over the last 1 month have been the best that we have heard since March. Masks that had hidden our faces have gone. Workers are beginning to return back to their workplaces, though there is some caution and there are some behavioral changes in play, and employers are proactively preparing back to office plans. Announcements that a vaccine will be rolled out in the near future has brought optimism back, and this is revealed in the economy or the state of the economy as well. If we look at the results, the September quarter witnessed a growth of about 3.3% in seasonally adjusted chain volume measures, though the year GDP is still negative 3.8%. This is not as bad as we had anticipated maybe a few months ago, 9 months ago. In fact, Australia is leading the way out of recession or out of economic downturn compared to the rest of the world. Unemployment, as we all know, is still a concern, and it will take a few years before we return back to the 5% unemployment rate that we have enjoyed for quite some time. Household confidence has increased, and a major contributor to the growth that we saw in September quarter was household consumption. Leading indicators such as loan commitments for housing also rose in October by a record level, coinciding with the home builder program of the government. Relaxations such as social distancing measures and other restrictions, they have encouraged spending on services, which rose by about 9.8%. Hotels, cafes, restaurants, recreation, and culture, these have rebounded, though the pattern is still quite disparate in different cities. Sydney is probably much better than Melbourne. There are dark clouds that still loom, particularly on international travel and tourism. Given that we are heading towards a very unusual holiday season, followed by unusual sporting season, it is pertinent to ask the question, what is the future of travel industry, in particular hotels? How consumer behavior will change this season, and how will it impact the hotel industry? Would some of the activities revert back to the normal practices? How viable are the current business models for hotel? Within this context, we have a very high profile panel to discuss the outlook for hotel industry. Let me introduce ADRIAN Williams. ADRIAN is Vice President Operation for Victoria, Tasmania, South Australia, and Western Australia, and Vice President Integration Pacific for the global hotel group, Accor. ADRIAN has held various roles in hotels in multiple cities and states across Australia and Canada. He is currently chair of the Accommodation Association Victoria Advisory Board, board member of the Melbourne Convention Bureau, and a member of Accommodation Advisory Panel for Victoria Tourism Industry Council. Welcome, ADRIAN. Our next panelist is David Simpson. David is Managing Director at Exia. Sorry, I pronounced a little bit with difficulty that word. A tourism, leisure, and hospitality consulting firm. David has held executive management roles for Starwood Hotels and Resorts worldwide, including Regional Director of Acquisition and Development Australia, New Zealand, and Pacific region. David also established the Hotel, Tourism, and Leisure Cluster within Australasia in 2013. Welcome, David.
Thank you very much, Piyush.
We are also joined by Kate Harper. Kate is Asset Manager Hotels at Global Fund Managers Salter Brothers. which holds an extensive hotel portfolio in Australia and the US, including Crown Plaza Hotel in Melbourne and Canberra, as well as Melbourne's Intercontinental. Prior to her current role at Salter Brother, Kate held the role of Manager Development at Intercontinental Hotel Group, while she will also work as a hotel development and investment consultant at her own Kate Harper Consulting. Welcome, Kate. Without further ado, let me ask David. David, hotel is all-encompassing word, but underneath there are various segments which cater to different clientele, different consumer needs. Could you tell us hotel industry classification that will help us in framing the rest of the discussion today?
Sure, Piyush. I think most people understand hotel classifications that were traditionally rated as 3, 4, 5 star, and those classifications have been replaced with international classifications now, which range from economy through to luxury. So you've got economy, then you've got mid-scale, which is probably the old 3 star, upper mid-scale, upscale, which was probably 4 star, upper upscale, which is what we used to refer to as 5 star, and then luxury, which probably translates to what was traditionally called 6 star, even though 6 star didn't really exist as a classification. Then you've got a breakdown in terms of select service hotels, full service hotels. So a full service hotel will have potentially multiple restaurants, bars, conference space, rooms, and it's got, you know, all of the facilities. And there's been a trend probably over recent years for developments to move away from that and become known as select service or focus service, where the majority of the income is in accommodation rooms, and there is just the limited service in terms of food and beverage and meetings and so on. You've then got things like airport hotels and convention hotels, and all of this is particularly relevant at the moment given impacts of COVID.
Right. Thank you very much, David. That helps. Now, let me frame another question for you. Internationally, we have witnessed that there have been widespread property closures and repurposing of a number of hotels. How has the impact of COVID-19 on hotel industry in Australia been?
Yeah, look, it's really interesting. I mean, we've obviously been hit pretty hard. The impact started in March this year. So if you look at the June financial year numbers for Melbourne and Sydney, you know, markets that were typically 80 to high 80% occupancies across the entire market dropped to about 65% for that period, taking into account the last 4 months of 2020. We expect that the first half of 2021 financial year has also been severely impacted, and we've got results through to November. You know, we're expecting that with domestic borders now open, the recovery will start. And, you know, where our Axia House view is the markets are going to come in somewhere around 50 to 55% for the 2021 financial year. Our view is that these markets will recover to pre-COVID levels, and pre-COVID we mean 2019 full year levels. We think that the key Australian markets will recover to those levels by 2023 from an occupancy perspective, and potentially 2024 from a RevPAR perspective, where, you know, there's a lag between demand getting back to normal levels and then room rates getting back to those stabilised levels. I think that, you know, there's different segments of the market that are going to react quite differently. Obviously, domestic leisure, people believe, is going to return quite strongly. I mean, I think Australians spent about $60 billion in 2019 travelling overseas, and those people won't be able to travel overseas. So we think domestic leisure will return quite strongly. Domestic corporate, potentially. I think there's some concerns with companies about liability issues with people returning to travel, and, you know, what happens if their staff members travel on company business and catch COVID. I think that's going to be interesting to see how it plays out. And then international business, we're probably the same as most people. Borders probably won't open until mid next year in any large scale. It'll probably take another 6 to 12 months for business to get back to normal. So hotels that rely heavily on international business will take a bit longer. And, hotels that are convention hotels, relying on business from the convention centre, or, large resorts that rely on convention business, we think that will take a bit longer too, for people to get comfortable having big groups. I think that, our quarantine hotels have helped keep levels of occupancy a little bit higher. Room rates look like they've dropped a lot more than they have. I think that's largely quarantine hotels taking business at government rates, which is lower. But I think, long term, it's really hard to tell what the impact's going to be. Our view is the markets will get back to pre-COVID levels. That will be a mixture of demand returning to more normal levels, but also some of the supply that we all expected to come into these markets won't happen. Stuff that's under construction will get completed and will open, but there's hotels that are in planning where both the equity participant and the debt are having a rethink.
Thank you, David. I think you're absolutely right. There would be different impact on different segments of hotel. I think, let me go to Adrian, who represents operators here, that in the last 9 months, the way we have worked or we have traveled has completely changed. The demand for face-to-face meeting with colleagues and clients has shifted significantly towards virtual meeting. And impact has been on hotel industry, as David was also saying. In October, the occupancy level was around 43% compared to 78% a year ago. Some of this might be attributed to lingering effect of border closures, but others may be due to changes in the business attitude. Would this change in future will continue and the hotel business would revert back to the pre-COVID level? And to what extent do you think these changes are permanent?
Yeah, it's an interesting question, and I think the right answer is who knows. We struggle to predict what's happening in 2 weeks, let alone what the long-term trends will be. And the one thing that we know over this COVID period is what we thought was going to happen changed dramatically 3 or 4 times by the time it actually happened. In terms of demand at the moment, your question, you mentioned border closures, and we don't know what the real demand is because there has been there's been a stop of demand through government action, rightly so, to manage with the health impact. I suspect that the demand is much stronger than what we're seeing in occupancy levels, and with borders only just starting to open, it's still going to take some time before we see it. But to your question in terms of will the trends become permanent, there's no doubt that there will be some changes that will be permanent, and they will emerge over the next probably 6 to 12 months. David mentioned the corporate risk concerns, and risk managers in large global corporates quite understandably are preventing their employees from travelling without a whole range of protections, and that's right. So that does mean that the corporate segment will be coming back slowly and in fits and starts, and will be very, I guess, project dependent. Face-to-face meetings with colleagues, will that move permanently to virtual? I don't think so. There is no doubt that there will be some of that. In our business, we're doing that as well. And we think that there will be some meetings that we will never do face-to-face now that we've all got better at using technology. But that doesn't mean that face-to-face meetings will stop. And we take a very positive, optimistic view that travel will rebound. It will continue. And long term, we think that travel trends will return to exceed the 2019 levels. Just that purpose of travel might be slightly different to what it is, but no less travel, I think, for the future for us.
All right. Thank you, Adrian. Are there cues in the regional trends? Like, for example, if we look at Perth, the occupancy level in October this year was about 70% of what it was last year. While in Melbourne and Sydney, it was about 20 to 40%. We know that there were differences in terms of the way these different cities relaxed their restrictions. But probably there is also different drivers of hotel industry that are affecting these different regional markets differently. Do you think that that is something at play at the moment?
No doubt, and it's easy to look at Australian cities as some kind of homogenous market, and they're not. There's different demand drivers in each city. If I look at the occupancy numbers for the month just completed in November, Perth City was at 57% occupancy. Melbourne was at 28% occupancy. So what was going on there? Well, a couple of things. First of all, Melbourne was only just emerging from a hard lockdown, as we all know. We've all been through. Melbourne was also impacted negatively by the impacts of the hotel quarantine program, and that has dampened demand initially. And also at the moment, the city is only just starting to bring back bars, restaurants, reasons for people to travel. So it will be some time before we see real demand coming back into Melbourne. That being said, if I have a look at pickup across our businesses in Melbourne, we're pretty optimistic and encouraged by what we've seen just in the last week as confidence is starting to return. Then you have a look at Perth. Why is Perth at a higher occupancy level? Well, they were never in a hard lockdown. They've been able to trade all the way through, and probably more importantly, and David touched on it, the quarantine program in Perth is picking up a lot of the load in Melbourne. Melbourne hasn't restarted the quarantine program, and there's a lot of hotels still in Perth that are taking international travellers. So that's the first and fundamental difference between the two markets. The other thing is that mining has been pretty robust in WA, and we were seeing a return of mining spend, and the mining-driven economy in Perth was giving us a lot of optimism pre-COVID, and that is really starting to kick again. That being said, Perth is historically a lower leisure travel market. Melbourne is a strong leisure travel market, and as we move into this summer period, I think you'll see Melbourne really kick and start firing again pretty soon.
Thank you very much. Thanks a lot. I think this leads to the next question, given that the revenue forecast and everything is so uncertain. Maybe Kate, can I ask you this question? With revenue per room being severely affected, low occupancy forecast, how have the valuation of hotel property impacted?
Yeah, so I guess there's no doubt that valuations have been impacted. From our perspective, our assets are in key sort of core locations on the eastern seaboard, CBD locations throughout sort of Gold Coast, Brisbane, Sydney, Canberra and Melbourne. So we have seen some impact, but I guess the way that hotels are valued from a future income point of view, comparable sales, price per key basis, the weighting of current year performance and 2021 forecast and the impact on valuations is not significant. So we are seeing a small impact, but I wouldn't say that it's material or significant. I think valuations of hotels in peripheral locations, secondary locations, places where demand outlook possibly isn't strong. I think those hotels will be the ones that will be impacted the most from a valuation point of view.
And would you see them being repurposed for something else?
Potentially, I think we're seeing, particularly with some of the new developments, so sites that hadn't started construction yet, I think we're definitely seeing some shelving of projects, repurposing of projects into other uses. So, particularly in Melbourne, there are a lot of projects on the outskirts of the city that potentially were better suited to probably residential initially, but didn't stack up at the time. You know, some of those projects are starting to fall over or sort of sit idle. Yeah, I would say any of the projects that are in a really strong location within the city, I think the medium to long-term prospects for those projects is still very strong.
All right, okay, that's good to hear. And maybe I can ask David here, since you mentioned, Kate, about the new hotel supply. So David, what impact is this having on new hotel supply? Is funding still available?
Look, it is. It's not as readily available as it was before. I think Kate's right. I mean, if you're looking at a new hotel development, most developers will look at it and think, okay, my hotel's going to open post 2023, 2024, where, you know, hopefully the so-called experts are right and the market has recovered. But it does affect valuation on new hotel supply. The valuers used to look at year 3 as stabilised year, and then they deduct the shortfall in years 1 and 2 from the capital value. Now they're looking more like year 5 as stabilised year 3. So that is definitely having impact. I mean, we're seeing projects that were valued at 80 million now valued at 70 million. That has an impact not just with banks but with equity. I mean, some of the equity sponsors are saying, well, you know, maybe we don't want to do it now. Maybe we want to look at something else. When you go to debt, the big 4 banks, there's, you know, different stories. I mean, I think ANZ are less likely to look at hotel deals at the moment for a number of reasons. Other banks we're seeing were, you know, transferring the opportunity to someone like CBA, who seem to be a bit more active. But, you know, their risk people are also looking at it saying, well, what do we have in our portfolio at the moment in terms of existing hotels, and how much more exposure do we want to take? And this has probably created an opportunity for a lot of the non-bank lenders, the private funds and so on, who are getting into the market. Our view overall is that we won't see the same level of new supply in the key markets of Australia that we thought would be coming, you know, in 2019, just for those reasons.
Right, okay. And can I ask, there's an audience question, maybe I'll direct this to Adrian. Given that leisure hotels are expected to lead the bounce back, do we expect to see repurposing of other hotel types to leisure to capitalize on this trend?
I'm not sure that you need to repurpose a hotel. Most hotels work across a whole bunch of different segments. So perhaps repurposing hotels might not be the way to think of it, but having a look at the services that you offer, readjusting the in-house service offering makes sense. An interesting way of thinking about that is that we have one of our hotels as a good example that has some meeting room space. We're not expecting that to be in much demand over the coming months. So we've broken that up, and in part of the area we've created a new lounge bar area, and in the other part of the area we're creating like a kids club type of space. So even though it is the same hotel, the asset's exactly the same, there's some different services to attract the needs of that different market segment.
I think that's great to hear, and we'll be discussing this a little bit more further in our discussion today, how the hotel design and layout would change. Well, let me go to Kate and continue the discussion that we were having on the financing. Now, Kate, pre-COVID, domestic, international, high net worth individual funds were active in the market. Given that there have been some changes to the economic fundamentals, both domestic and international, and there is also pressure on household discretionary income, do you think these have affected valuation quite significantly?
I mean, as I was saying about valuations before, I think interest from international investors and domestic investors still remains very, very strong in the Australian market, and particularly in markets like Melbourne and Sydney that are quite difficult to penetrate from an investment point of view. So I guess, investors are looking past this COVID period to what the value of the hotels is on a, I guess you'd call it a stabilized basis, but a recovery basis. So we are seeing some pretty strong interest from many groups continue in the market, and pricing remains very strong. And I think it comes back to Australia's reputation as an investment market for property and for hotels is strong. The fundamentals are strong, and it's always been considered a very safe location to invest. And I don't think that's changed, particularly with the way that we've handled the pandemic here. I think our reputation internationally is very strong.
And do you think there are acquisitions still looking to acquire properties in the market?
Absolutely. Yeah. There's a lot of groups out there. There's existing groups. There's new players. The deals that are out there in the market at the moment are attracting significant interest and strong bidding from what I understand. So definitely the interest is still there. Right.
Okay. David, given that, as Kate is saying, that there have been some impact on the valuation, but there is still an active and thriving market, do you think that buyers are looking for bargains, and are they likely to be achieved at this moment?
There's always investors looking for bargains. I don't think they're likely to get them at the moment. As Kate said, barriers to entry in Melbourne, Sydney, key markets of Australia are incredibly tough. I think that when you're looking at an acquisition and you look at future cash flow and discounted, internal rate of return and net present value calculations, you can't help but take into account the fact that 2021 as a calendar year, if you're looking to buy a hotel now, for example, 2021 being the first calendar year, it's going to be down. And because of the way the discounted cash flow works, obviously that's going to have an impact on the value. But other than that, I don't see discounts due to a lack of demand. I think there's always going to be strong demand in Australia. I mean, going forward, people look at us, we've done incredibly well managing COVID. It's a very safe political and social environment, strong economic environment. And I think investors still believe in the long-term fundamental demand and supply equation that we have here. So while some may look for it, I think smarter buyers are going to come in and buy things probably more at fair price than inflated price, as has happened in some cases in the past.
Right. Okay. Maybe at this point, probably I would like you to reflect on how the industry has evolved over the last decade from the perspective of the role that F&B and accommodation that have played to the experiential hotels. How have customer expectations changed, and what new business model do you think have emerged? And going forward, how might businesses reconnect and communicate with their customers?
Yeah, look, I think food and beverage, the first part of your question, PIYUSH, food and beverage is critical to guest experience. I mean, a lot of people that we work with and help come from a initial mindset that food and beverage doesn't make much profit in a hotel. Departmental profits are low. When you take the overhead cost and the real estate cost out, it's probably losing money. So let's keep it to a minimum, particularly as you move up the scale towards luxury, upscale towards luxury. Our view is quite different. We think that the food and beverage offering can really drive customer experience that transcends, what others are doing in the market and creates real competitive advantage. And we look at what impact we think food and beverage and the customer experience has on occupancy and room rates. I mean, just a simple example, if you've got two hotels in a market, one's, got a lobby where you check in, looks like an office building, and you got rooms and the rooms are great. The place next door has similar rooms, but a great ground floor food and beverage experience, restaurant, bar, doesn't make a lot of money, but we look at that and think that the experience you can create for a customer with those additional facilities is significant and will definitely drive demand, reputation, RevPAR for the hotel. Customer expectations have changed a lot. I mean, with social media and transparency of what is on offer, people are more discerning than ever. And I think that one of the things we're going to see going forward is in recent years where occupancy is very high, you know, mid to high 80s, a lot of hotels are doing incredibly well. And when you think about that occupancy over a year, it means a lot of nights during the week and on Saturday, whatever, they're full. The market's full. So hotels that are not particularly well run are still doing well. When we are now in the situation we're in and we're starting to recover, hotels that are well branded, well positioned, well run, have a really good understanding of who the customer is and what does that customer want, they're going to recover quicker. And those hotels that have not been particularly well run or branded, perhaps independent, where they don't have access to the big Accor, you know, Hyatt, Hilton type distribution systems, I think they're going to struggle. And I think it's really important that hotel operators and owners understand their target customer. What do they want? How do we deliver that better than the competition in order to have people come, and they come through the brand loyalty system, but then the loyalty on property is built because of the experience they're given. And they say, why would I want to stay somewhere else when I can get everything that I want and this hotel meets all of my needs? So I think that's really important. Hotels have changed a little bit in the sense room sizes have got smaller, and they've got smaller in Australia because, you know, cost of steel and concrete and labour, you know, makes the construction incredibly expensive in Australia. So, you know, if you take a 40 square metre room and you bring it down to 36, or a 30 square metre room, bring it down to 26, that 4 square metres has a huge impact on the cost of construction. And what that's meant is the room design has changed. No longer do you have the big anwar in the room. You know, you have a LCD panel on the TV, on the wall. Bathrooms have glass because it makes the room look and feel bigger. And I think then hotels are saying we need to create more of an experiential impact in the lobby and the food and beverage area. So it's a bit like, you know, you go home at the end of a work day, you go to your bedroom, you change from your work clothes into your play clothes, call it, and then come into the living room and, you know, join the family. And I think hotels are doing that. I think it's going to be interesting going forward what impact COVID has on that, and whether people like to mingle. I think ultimately we see that returning, and that's been a trend. Other things that, you know, we're talking about, you know, buffet restaurants, what's going to happen with those? I think there's going to be an impact there, but it should be driven by customer experience and really understanding your customers and making sure you deliver what they want.
What I'd add to that, and David's 100% right. Hotels globally, we got it wrong in food and beverage 20 years ago. We value engineered the life out of it. We're very good at cost management. And we created boring outlets, and people went elsewhere, and we missed the early trend of food and beverage. But make no mistake, hotel food and beverage outlets are back. They are in vogue. People love going to hotel bars now. As long as you build a great hotel bar and create a great atmosphere, it's where people want to be in the cities and regional areas that they're in. So creating that experience is exactly what David said. And I think you will see over the next 10 years a really big re-emergence of hotel food and beverage outlets right across the country.
Thank you, Adrian. While we are there, I think I may ask also a question on operational realities and how they have changed. Now, given that there have been uncertainties that were imposed by COVID, and post-COVID may have some significant changes in the operational realities of hotels. So what are those key operational considerations for hotel industry to navigate through this uncertainty?
Well, the first thing is I think the industry's done well, and with the government support is protecting our teams. That's first and primary focus, I think, for everyone. Making sure that we keep our teams connected in the industry as much as possible and look after everyone that's been negatively impacted, which has been so devastating for so many of our people. But as we chart our way out of this, what's the industry looking at? It's a unique opportunity to consider every cost on a zero base budget. We've never really had the opportunity to do that before, and it puts a pretty big spotlight on inefficiencies, and it's a really good opportunity to remove those. Similarly, hotel structures, making sure that we reimagine hotel structures, we build efficient structures for the long term, and that sees roles being reimagined, redesigned. We've spent significant amount of time in our business doing that, and we think that those changes are for the long term. In terms of service levels, we've touched on it just now in the discussion with food and beverage. Guests, when they come back, they do want experiences. They will interface with the city that they're in a little bit differently. And if we aren't thinking about our guests and providing those experiences, then we're going to be found out pretty quickly. So although cost containment is important, also providing something that people want to come back and engage with. Remember, of course, that we are talking primarily at this stage about leisure guests. So making sure that we are putting back in place, albeit in a different way, the services that they need and want and will engage with. At the end of the day, our industry is a service industry about creating experiences, and we can't forget that as we look at the hard business realities of cost containment. And then, of course, building confidence through COVID-safe plans. And I think that as an industry, we've done remarkably well in that space. Every hotel, every operator has invested significant amount of time and thought and effort in enhanced cleaning and about reimagining buffets and conferencing spaces and so on. And I think our industry is as prepared as any, and if not better than most.
Right. Thank you, Adrian. I think that's good to hear. There's an audience question coming in. Kate, would you take that one? It says that, is there likely to be a new trend with the relationships between hotel owners and hotel operators? For example, leases or franchising agreements replacing the traditional management agreements?
Look, I don't see that changing significantly. I don't see any particular driver of that that change. I mean, franchising definitely requires the owner of the hotel, the owner of the property, to have a fairly sophisticated level of operational capability and experience. So, it really depends on the owner profile and whether they're sort of set up to be able to operate the business themselves and then tap into the hotel company branding and systems to be able to drive the revenue aspect of the property. But I mean, I can't see any particular headwinds that would drive that change. I do think there'll be some shying away from leases in the next few years. I think that there's been a number of operators that have taken some pretty heavy leases in times that were very strong for hotels when occupancies were very high and performance was very strong, sort of in the last few years prior to COVID hitting. And their lease obligations were, far in excess of what could be supported during this downturn. So I think there'll be a big hesitance from those groups that were entering into leases to move forward as aggressively as they were in recent years, for sure. From an operator and owner point of view, I would say that the way that operators and owners have worked together this year has probably been stronger and closer than it's ever been in the past, through necessity to just come together and work through it as best we can. Like, this is an unprecedented year, and no one has necessarily had the expertise to navigate through it. So we've had to work very, very, very closely with our operators to sort of come through it as strongly as we can. And I think that's sort of going to set up our relationships for the future, I would say.
And what Adrian was mentioning earlier, that they have changed their protocol for making the workplace safe. How do you think new hotels will withstand changes that are arising from new restrictions on social distancing and COVID safe cleaning and other protocols that are emerging?
I don't think it'll be different for new hotels to what it is to existing hotels. Really, it's implementing the cleaning and safety standards that the hotel operators have implemented generally on a global basis. So what I think we'll see is that the global operators with the well-established and branded clean standards will sort of shine in this environment. So I think there'll be a definite attraction to the big brands and the promise that they bring, that they've gone through this development and implementation stage, and that they've definitely got the most advanced and most robust systems in place from a cleanliness and safety point of view. And then it's really just a state-by-state approach on distancing and local regulations. And I mean, they change every week. So we're constantly, updating our facilities and moving around furniture and working out how many people that we can have in our venues, whether they can sit or stand. Like, it's really moving on a weekly basis, and we're just keeping across announcements and working out how we can maximise capacity in our venues.
All right, okay, thank you. There's a question from a participant. Maybe I'll direct this to David. David, what is needed to get business travelers back in the market? Is it the vaccine or certificate enough? Or is this the case of testing linked to travel at both ends and reduce quarantine risk? What will get the business travelers back?
I think a little bit of certainty would be the first thing. I mean, we've just come out of lockdown in Melbourne. Borders have just opened. I think that there's probably people wanting to come back. I mean, people working from home are wanting to get back into the city before they start traveling interstate. I think they've got to get from home back to their own office and start to mix with their work colleagues. I think the vaccine is really important. And I think that certainty around border restrictions and processes at the airport and so on is going to be, it's going to be really important for people to, make that decision that they want to start moving again.
Okay.
I might add to that. I think that globally is a different challenge. Getting corporates travelling globally. There's clearly border issues. Domestically, I don't see so many issues. Confidence is a really key thing, and the industry has, as I said earlier, done a lot of work on that. But what the government has done in all states and federally is pumping billions of dollars to stimulate the economy. That alone, we have confidence will get people travelling. When you kick off infrastructure projects, then that will kick off engineers travelling and consultants travelling and all of those other things. So we're pretty optimistic that a low caseload, some development on vaccines, reasonable cost of travel, and stimulus all will set us up for a pretty good return of corporates over time.
Adrian, while we are there, can I also ask you a question? Would you see a heightened use of technology to alleviate operational burden and promote safety?
Yeah. Technology in hotels is always an interesting topic because they don't always go hand in hand. And the reason they don't go hand in hand is there's usually global networks to contend with. There's high capital costs. Everyone's trying to sell you something, and it all looks good, but it's very hard to build a robust technology platform that meets everybody's needs that we have going into hotels. So typically, hotels are a bit slow to adopt technology. But no question, we've seen QR codes picked up straight away everywhere. Somewhat late, the government have come in with QR codes. So to me, that's pretty obvious. Contactless check-in is the buzzword in hotels at the moment, and everyone globally is trying to retool for that, and not before time. I think also hybrid meetings is seeing a lot of work and investment going into the meetings, small meetings industry in particular, and trying to work out how we can get good use of technology on the meetings floor. And a bit of the BYO device and use of clouds will probably help cut across some of the challenges that we've had before. So no doubt technology is there, but I wouldn't think you'll see hotels jumping out of the box over the next 12 months and being technology leaders.
All right, okay. Now that's interesting to hear. And another question for you, Adrian. With well-being of employees and customer at the core of business and the reality that hotel quarantines have been challenging, do you think hotel industry need policies and procedures to build confidence of all involved and ensure safety?
Well, yes, and hotel quarantine obviously is a hot issue and will continue being a hot issue as the industry does its part to help bring back Australians into back into Australia for Christmas. The hotel industry is doing its part to bring in seasonal workers to pick fruit. Tasmania actually started this week in bringing in seasonal workers out of the Pacific and Timor to help pick cherries and apples and so on in Tasmania. So it's an important part that the hotel industry is playing in getting the economy going again. Now, with that brings risk to hotels that are operating in the quarantine area because they are part of the government's health system. And we've seen some challenges recently in South Australia and Sydney, and that will be an ongoing consequence of dealing with what is a pretty aggressive virus. But again, we have a very clear-cut set of COVID-safe plans that we have worked as an industry with government, state and federal, with experts. And even though the media doesn't always present it, let me reassure everybody that what hotels are doing is over and above what global experts are saying are needed. Protocols are really seriously taken for all hotels, not just the quarantine hotels. And every single hotel operator, every single hotel owner, every day is talking about the safety and care of their people. Sometimes things will not quite go right. And remember, we've got hotel staff that are out in the community. They are interacting with other people, and there's many sources of contact. But we're doing a fair bit of work, and a lot of time and money is being invested in this.
Right. Adrian, looking at the operational aspect of the hotels, that given that it has been quite fluctuating in the last few months, so how can hotel operators identify on-site work needs? Do they need to stagger return to work of their employees? How do you think industry can assure continued workforce success, including training for new skills and requirements? What is needed in order to anticipate the need for the workforce and they succeed in what they do?
Yeah, it's an ongoing process. I guess, firstly, every business in Australia has an obligation under safe work to meet the basic obligations, and then every operator over and above that has done a lot of extra work in training and skilling their teams to firstly understand and then work out how to operate in a COVID-safe environment. As I said, there's been lots of time and effort put into that. Many operators are doing temperature checks every day on arrival, doing health declarations, working with their teams to work from home where possible, have flexible working. Hours are being rescheduled to try and avoid peak use on public transport. All of the usual things that that good businesses are doing are being done within the hotel industry. And even though it's not necessarily required, you'll stay in hotels around Australia and see judicious use of face masks and so on. So can we do anything more? We're doing a lot already. Maybe there's more we can do, and things keep changing, and as they change, we'll keep doing more. The key really now is to provide the skills for people as they start doing jobs that are starting to merge, and that's really where our effort and focus is now.
All right. Thank you very much, Adrian. Kate, can I ask you this question? How can hotel property owners accurately diagnose the current health of finances and liquidity of their businesses?
I mean, we work very closely with our operators. So we've got a very, regular and current understanding of what the financial situation is for our hotels. This year's been very much focused on cost control and cost mitigation, and really working through every single expense that the hotel incurs on a monthly basis. I guess the thing about hotels is that even when they're closed, or even when they're operating at very low occupancies, there's still a significant cost base. So there's the cost of the ongoing employment of the staff, there's the cost of ongoing contracts, there's the cost of electricity and gas, etc. So we've had a very, very close eye on that through this year, and at the moment our focus is on budgeting for next year, and the focus for next year, now that we've sort of right-sized our businesses and very clearly sort of identified what the cost base should be, is on how we drive revenue, and also accurately predicting how the revenue will come back throughout the year on a stage basis, depending on the segmentation.
Can I add to that as well? I think absolutely hotels are looking at cost, and they should, but where we're involved, we're working with them very closely to make sure that cost cutting does not have a negative long-term impact on reputation of the hotel. I mean, sometimes cuts go too far, it affects customer experience, reputation. That's very hard to recover. So, being smart about it, I know Kate would be, is important, but the focus has to be on how do we recover, how do we gain market share, maintain market share and grow it against the competition as the demand starts to return.
And I mean, my conversations now with our operators, through the year, it's been about how we minimise costs while the hotels are being closed. But now the conversations are shifting to, okay, we need to spend money to make money. So we need to work out where the right investments are to be made in order to capture market share and in order to drive revenue into the future. So, we don't need to go out and just start spending a whole heap of money on staffing the hotel when there's virtually no guests in them, but where can we target our investment? Where can we target our spending to set us up for next year and years into the future?
I think just one other point, I'm a bit surprised. I know there is a bit of renovation happening, but I'm a bit surprised there's not more renovation happening. When the markets were in the high 80s, owners who are wanting to renovate their hotel look at it and say, it's not just the cost of the renovation, it's the business that I'm going to displace in order to free up the rooms to do it. There's no better time than now. If we're right and it's going to take 3 years for markets to fully recover, there's really no better time to look at that. And, owners are going to have a period of grace with the banks. I think it's safe to say a lot of hotel owners would be breaching their interest cover covenants because of lack of profitability. That can trigger a valuation. The banks are not going to do that because everyone's in the same boat. But, you know, to me, it's really looking at how do we use this time well to drive long-term asset value. And I think it's a great opportunity to be doing renovation work.
Right.
Hard to pull a trigger on that quickly. I think that's probably the answer, David. But we, and as you know, there are a number of owners that have brought forward plans that were already in place and look to fast track refurbishment over the next 6 months, so that when the recovery is right back, that they'll be ready for it.
Yeah. So I think that brings another question too. Maybe I'll ask Kate first. That Kate, is there secure financial support available for hotel industry in this situation?
Oh, look, I think it depends on the group. I mean, we've maintained a very strong communication and sort of open book with the banks, obviously, throughout this period. So we've had a really proactive approach to bringing them along with what our strategy has been. You know, I can only speak from our own experience, but, you know, we've managed to maintain strong support from our banking syndicate throughout. But, you know, there certainly would be groups that would be identified as perhaps, you know, not necessarily being able to be supported on an ongoing basis in the industry for sure.
Right. Okay. Thank you very much. David, there's a question coming in from participant. Maybe I'll throw that on to you. For hotels that are business centric, such as airport and conference hotels, would the downturn drive repositioning of products, synergies with services like co-working, or downright closure or halted developments?
Look, I think if people had a view that it was going to be a long-term impact, then definitely you'd have to look at that. I mean, if you don't believe your hotel can recover to pre-COVID levels because of a shift in demand, a long-term shift in demand, you've got to consider that. I think there's one hotel, you know, the Ridges on Swanston Street, which is being sold. I think there's an ability to convert that to residential. I think it's probably got more value as a residential site than a hotel potentially. So I think people will look at that, but I think that, you know, COVID's been worse than some of these other pandemics, but everyone recovered from SARS, everyone's recovered from bird flu, from the GFC. This market is incredibly robust. And I think that, you know, you want to think long and hard before you start thinking about, you know, basically completely changing the positioning of an asset going forward. Based on what's happening now, I think it's going to take a little bit more time. But look, the answer is long term, if you think your business demand drivers are not going to be there for the type of business you've got, then repositioning is your only option.
Yeah. Thank you very much. Adrian, can I ask you one more question, which is different than the industry which you are in? Like last decade was the decade of new model, Airbnb. Where is this product going to land post-COVID?
My first answer is the same as earlier, that it's hard to predict. There's no doubt that Melbourne has seen a massive growth over the last 6 or 7 years of Airbnb, and the shadow supply is often not really thought about when you look at Melbourne's market performance, and in particular the rate growth that we saw over the peak in Sydney wasn't replicated in Melbourne. And the reason for that was that shadow supply growth. Over this crisis period, Airbnb nationally have lost something in the order of 17 to 20,000 properties, and there's 6,000 or 7,000 of those here in Melbourne. That doesn't make me sad. that's a good part of it. I think that many of those investors have been caught out, and they will shift to the safety of long-term rentals. The early stages of Airbnb, their returns would have been terrific, but I think it will have got harder and harder, and certainly that industry has got a bit more sophisticated too, with virtual hotels being set up, and a lot of that has been handed back and they've been caught out. I think David mentioned earlier too that global operators have got a better opportunity to deal with the COVID cleaning more so than a private Airbnb apartment owner, and I think that gives advantage back to hotel operators. So we're excited by that. That being said, there is still apartment growth happening, new apartments coming in, and I can't help but think that some of that will see the short-term market. It will just be down to a basic supply and demand, as everything ultimately always is. And if there's demand for it, you'll see it go on to onto short term. Airbnb is not going anywhere. In short, they will be around. The mix will be a bit different. New hotel supply coming in over the next 12 months might see the balance tip towards hotels again, but Airbnb is part of the mix.
All right. Okay. And where do you think are the new growth markets after China?
I wouldn't discount China yet, and I mean, I read like everyone what's happening at the moment, and it's concerning. But I wouldn't fully discount China yet, because we've got a lot of expats here, and the VFR, visit friends relatives market, always is strong, and I think that they'll still be part of it. They won't be the number one for some time. You know, what will be number one is domestic. That will be the focus for the next little while. But I think logic would suggest that the shorter international flights will continue to be important. It'd be less likely for people wanting to get into an aeroplane at the moment for a long haul. So Southeast Asia's the area. You know, there's always talk about India. India's always got the potential, but you know, that will take a long time. I think Southeast Asia and massive domestic growth.
Right. Thank you very much. I think we have reached the conversation to almost close. Let me come back to each one of you for your final words. Let me start with Kate. Kate, what are your final words on the future of hotel industry?
Oh, look, I think you know, once we get past this short-term hurdle of COVID and the impact that it's had on the industry, I think the prospects of our industry here in Australia are very strong. We've got amazing product. We've got an incredible destination for international tourists to visit. Once that's enabled, once again, we've got a strong corporate travel market. We've got a lot of quite varied demand drivers in our hotels here, particularly in our city locations. So I think long term, the fundamentals of the businesses are very strong, but it's, you know, obviously a really difficult period at the moment, and we need to get through this and set ourselves up for success in the medium term.
When do you think the normal would return?
Look, I think depending on the hotel, our view is around 2023 to get back to 2019 normal levels of trade.
All right. Thank you. David, your final words on hotel industry's future?
Look, I agree completely with Kate that the fundamentals of the industry here in Australia are incredibly strong. I think there's a few things we can look forward to going forward. I think that because of very high occupancies and strong business demand on the back of, you know, not enough supply, I think some owners have become a bit complacent, and I think that to compete in a much more competitive environment, get back to stabilised levels of trading, people really have to look at what the customer wants, and they're going to have to look at their asset, and they're going to have to fix the things that they haven't fixed, and they're going to have to address the problems that they haven't addressed. So I think from a consumer point of view, they're going to see a much better offering coming out of this. I also feel there will be a structural change in the industry in the relationship between operators and owners. And I believe, and I have for some time, that, you know, franchising has to grow. I think that we're very involved in discussions in North America, and I know the big operators in North America are, you know, over there it's quite different to Australia. There is a lot more franchising than hotel management agreements. I think when you look at the impact that this has had on operators, you know, where their revenue base for management fees has dropped dramatically and they've still got, you know, very high cost. I think they have to look at their model. I think owners more and more want control over the P&L. I believe there will be a shift towards franchising. So, you know, from both perspectives, I think the winner is going to be the customer.
Thank you very much. Adrian, your final words on the future of hotel industry.
Yeah, well, firstly, when I listen to the people in the industry like David and Kate, it gives me lots of inspiration and excitement because we've got such wonderful people in the industry. You know, why would you ever doubt that we're going to have a strong future? We've got some short-term pain. This has been absolutely devastating on our industry and our people, and the loss of jobs and employment for teams right across the industry is really sobering. It's quite staggering. In Victoria, we've been losing almost $1.5 billion a month due to the loss of domestic travel. That's the bad side. The good side is those numbers are big, and the government has focused on our industry more than they ever have before. They're engaged with us. They're talking to us. They understand the impact on economic growth. They understand the impact on employment and job creation, and also the livability of the state and the city. I think that sets us up really well for the next 10 years, which once we get to Kate's 2023 level, I think we're going to see a decade of a golden era of travel. So I'm very optimistic. I think we'll get past this and we'll be ready to go. The smart owners that have invested wisely now, as David said and Kate has done, they'll be rewarded pretty strongly in years to come.
Thank you very much. And thanks a lot for your time and for this very interesting conversation today. I would like to also thank all the participants who joined us today for this webinar. And this was the last State of Industry webinar of this year, and we'll reconnect with everyone next year. Have a nice holiday and a new year. Thank you very much.
Thanks, Bruce.
Thanks for having us.
Thank you.